Hello everyone, welcome again to our official channel of Banking Dreams. This is Pragya Saxena and today we are going to complete up with the 6th class of ours. So yes, we are preparing for the upcoming exam of Union Bank of India for the post of LBO, that is Local Bank Officer. So yes, these classes are going to be held on a regular basis and we do meet for like 30 minutes. Okay. So friends, if you are interested in preparing for the Union Bank's Local Bank Officer upcoming exam of 2024, then you can definitely check out our description box. Why? The reason is Knowledgist is offering you all a new crash course. In this, you would be getting 400 plus live classes along with recordings would be there. Why the recording sessions would be there? So as if you would have missed any of the live classes, you can go through them as a backup option. Mock tests would be there, 5,000 plus banking MCQs along with one-on-one faculty interaction would be there. All the syllabuses, all the things would be covered under it. And of course, for this sake of purpose, in order to attain success, you can check out the description box. The link is being given there. And otherwise, you can contact us on a direct basis using our WhatsApp number. So yes, friends, let us not waste our much time and conclude with the banking and financial portion of ours. So we will be covering these in the form of multiple choice questions of 2024. So yes, what is the very first question today? What is it asking? It is talking about CBDC. If you guys would have gone through our previous class, previous session, then you must be knowing our previous session revolved around this CBDC thing. What is it? If we talk about what is CBDC currently, then CBDC stands for Central Bank Digital Currency. What is it? It is Central Bank Digital Currency, right? So yes, this question is asking what recent development in CBDC functionality has been highlighted. Whether discontinuation of the CBDC program, launch of the first programmability use case pilot, option C, that is reduction of transaction volumes, or option D, limiting CBDC to peer-to-peer transactions. So we have to tell, what are we supposed to tell here? We have to answer the recent changes, or you can call them the recent advancements, development in CBDC functionality, which have now been highlighted. So as we all know, what is CBDC? It is the central bank digital currency. So in its name, it is continuing this thing that it is a digital form of money. What is it? It is a digital form of money. And this money is issued by central bank. Okay, so we came up with two informations. So here the money is not being issued by any of the commercial banks, but rather than is being issued by the central bank. So that is the reason we call them digital fiat currency or digital based money as well. What do we call them? Digital fiat currency or digital base money. So yes, here if we talk about the new developments, the new advancement in CBDC functionality, then the correct option this time would be option B. That is the launch of the first programmability use case pilot. So what is the new thing? See, RBI has launched the first programmability use case pilot for CBDC. What will it do? What is the use of this particularly? It will enable transfers to farmers, and this new innovation along with developments in offline functionality, it demonstrates the RBI's commitment to enhance the CBDC's utility and its adoption in the rural areas as well at the same time. So yes, what is the new development in CBDC functionality? If we talk about the new or recent development, then these revolve around the farmers. Okay, the farmers who are basically from the rural areas, or if they are from the semi-urban areas as well. So yes, it will enhance out the CBDC's utility along with the adoption of CBDC. Hi, Sandeep. So yes, now if we talk about next question, it is asking, what is the main goal behind RBI's proposed modifications to the LCR framework? We have to tell everything happens, everything takes place because of certain reason. certain aim, objective, goal. Okay. So here we have to answer the main goal behind RBI's proposed modifications to the LCR framework. Whether it is to reduce the number of digital transactions, to decrease the quality of liquid assets, to improve banks' management of liquidity risk, or option D, that is to increase the required LCR for banks. Now, what is LCR? LCR stands for liquidity coverage ratio. What is it? It is liquidity coverage ratio. Friends, it is basically a measure of the proportion of highly liquid assets. Okay, what is it? It is measure of proportion of the highly liquid assets, the assets which are highly liquefied in nature. Okay, in any of the financial institutions, the reason is why do these financial institutions, they use LCR just as to ensure that it can meet its short-term obligations. Okay, that is the reason this LCR is being used. And these LCRs are being mandated by the Basel Accords. And what is it? It is a set of all the international banking agreements. So yes, that is all about what do we mean by LCR. It is liquidity coverage ratio. So our second question is revolving around LCR particularly, which is asking the main goal behind RBI's proposed modifications to the LCR framework. So yes, Sandeep, Vikas and Niladri all are with option C this time. Let us check. Yes, option C is the correct one. That is to improve banks' management of liquidity risk. See, RBI completely intends to update the LCR framework to better equip the banks to manage liquidity risk, and particularly the reason is in order to increase the fluidity of digital banking transactions during financial stress periods. If there are any financially stressed periods going on in the bank's history present, then it is of course to increase out the liquidity of digital banking transactions during that particular negative period, you can call it, right? Now, coming up with the next question, which is asking, how might the review of the LCR framework impact banks as per RBI's proposed modifications to the LCR framework? Question is, maybe it may be like seeming or sounding like difficult, but it is simply asking how these new developments, these new changes in the LCR framework impact banks as per RBI's proposed modifications to the LCR framework. So it is kind of the part second of our, give me a second, friends. It is kind of the part second of our previous question, right? So it may reduce digital banking services, could lower the LCR requirement below 100%, might require banks to hold more HQLAs, or option D, that is, will eliminate the need for HQLAs. Now, what is going to be the correct option? Should it be option A, B, C, or D? We just have to tell the impact banks would be forcing, banks would be like going through, or banks would be facing after this new RBI's proposed modifications to the LCR framework. Should it be option A, B, C, or D? What should it be? Vikas, Niladri, Vikas is saying he has already answered with option C. That is to might require banks to hold more HQLAs. Okay. Anyone else? Sandeep, what should it be, dear? Have 5 seconds. Go through it. We are not running anywhere. Okay. So yes, this time the correct option would be third. That is option C, which means the revision aims to reassess the assumptions regarding deposit outflows, and it could lead banks to maintain higher level of HQLAs to meet potential cash outflows, possibly affecting their financial operations. So yes, Sandeep and Vikas, both are also correct this time. Next question is talking about what is the primary purpose of introducing cash deposit facility through UPI at the CDMs? It is asking the primary reason, the primary purpose of introducing cash deposit facility, okay, through UPI at the CDMs. What is CDM? CDM is a cash deposit machine. What is it? It is a cash deposit machine. And these are kind of self-help terminal provided by banks where people can deposit money without going directly to bank's branch, right? So what are these? These are self-help terminal, okay, being provided by bank where people can deposit money without going directly to any of the bank's branch. They do not need to go to the bank's branch directly in person. So yes, we have to tell the primary purpose of introducing cash deposit facility through UPI at the CDMs. So is it to reduce digital payments, to enhance customer convenience and banking efficiency? Option C, that is to limit UPI transactions, or option D, that is to increase debit card usage. What should it be? Okay. Yes, very good, Sandeep. High quality liquidity assets. Vikas, Niladri, Sandeep, all are saying it should be option B. Let us check. Yes, this time the correct option would be B. That is to enhance customer convenience and banking efficiency both at the same time. So yes, RBI, what is the aim? RBI is aiming to simplify and to enhance the banking experience by allowing cash deposits through UPI at the CDMs, and it will eliminate the need for debit cards and make transactions more efficient, which is basically needed. Okay. Next question, which is asking, how will the cash deposit process change with the introduction of UPI at the CDMs? Requires a debit card and PIN for every transaction. Only cash withdrawals will be simplified. Customers will need UPI enabled on their bank account for cardless deposits, or option D, that is increased reliance on physical banking methods. Question is simple. It is asking, how will these cash deposit process change with the introduction of UPI at CDMs? So what should be the change? What should be the exact change these cash deposit processes would be undergoing? So yes, Niladri is saying, Niladri Biswal. Okay. Option C is the correct one. Vikas Chauhan, option C. Okay. So yes, this time the correct option, my friends, it would be option C. That is, customers will need UPI enabled on their bank account for cardless deposits. So yes, with the new system, customers can deposit cash without a debit card using only their UPI enabled bank account, thereby streamlining and simplifying the deposit process at the CDMs, cash deposit machines. Okay. So next question is talking about, which institution was penalized by RBI for non-compliance with the directions on loans and advances, statutory and other restrictions in the month of April 2024? Whether it is HDFC Bank, Axis Bank, IDFC First Bank, or option D, that is ICICI Bank. We have to take the name of that particular institution that was penalized by RBI. The reason is the non-compliance with directions which were being provided under loans and advances, statutory and other restrictions. And this whole scene took place in the month of April 2024. So Sandeep is saying it is ICICI Bank. Niladri is saying it is IDFC. Vikas is also with option D, that is ICICI. So yes, this time, my friends, the correct option is C, that is IDFC Bank. See, IDFC First Bank was fined ₹1 crore by RBI for failing to comply with the central bank's directives on loans and advances, statutory and other restrictions. And what does it showcases? It highlights the importance of adhering to regulatory standards. Clear? So what was the total fine it was being issued under? It was of ₹1 crore, and the correct institution's name was IDFC First Bank. Now, coming up to the next question. What is the expected growth rate of unsecured loans under co-lending arrangement in FY25 as a result of RBI's revised risk weightage? We have to tell the expected growth rate of unsecured loans under co-lending arrangement, all the unsecured loans which are under the co-lending arrangements in the financial year 25. And this whole as a result of RBI's revised risk weightage. So it should be 15 to 25%, 25 to 35%, option C, that is 35 to 45%, or option D, that is 45 to 55%. Now, what is an unsecured loan? Here it is talking about the expected growth rate of unsecured loans, right? So, unsecured loan is basically a type of loan that does not require you to provide any collateral to avail them. Okay, it does not require you to provide any collateral to avail them, and the process of issuing this unsecured loan is simple. It is issued to you by the lender on your credit worthiness. Okay, it is issued to you by the lender on your credit worthiness, and here you would definitely be taking this loan as a borrower. Okay, so yes, if we talk about during these unsecured loans, what is the other processes, then it is expected from you to have an excellent credit score, and it is like a prerequisite for the approval of any type of unsecured loans. Unsecured loans are different. There are different types of unsecured loans, like educational loans, okay, which we call as the student loan, credit cards, consolidation loan, line of credit. These come under unsecured loan. So yes, what should be the correct option for this question? What should be the expected growth rate? Anyone is having any idea? Sandeep is saying it should be 25 to 35%. Okay. What about my other ones? What should it be, friends? Should it be option A, B, C, or D? Niladri, Vikas? Giving you 2 to 3 seconds. Think about it. Okay, so this time the correct option, my friends, it would be option B, which is 25 to 35%. So, yes, Vikas is also correct. RBI's revision of the risk weightage for unsecured consumer credit to 125% from 10% will moderate the growth of unsecured loans to 25 to 35% in the financial year 25. Okay, and this is particularly down from an estimated 35% in the financial year 24. So yes, Amom, this time the correct option, my friend, it is option B. Now, talking about next question, which is asking which two loan types are expected to increase their share in the co-lending AUM due to the higher risk weights of the personal loans. What is it asking? It is simply asking the two loan types which are expected to increase their share, okay, in the co-lending AUM. The reason is the higher risk weights for the personal loans. Now, what is AUM? Co-lending AUM, it is the assets under management. What is AUM? It is assets under management. And if we define it, what do we mean by co-lending assets under management? Then it is the total market value of investments which are managed by multiple lending partners to provide loan to borrowers. What is it? It is total market value of investments managed by multiple lending partners to provide loans to the borrowers. Okay, so this is all about what do we mean by assets under management. So question is simple. It is asking that two loan types which are expected to increase their share in the co-lending AUM, whether it is education and vehicle loans, MSME and home loans, agricultural and gold loans, or option D, that is corporate and infrastructure loans. So what should it be? Should it be option A, B, C, or option D? Amom, Vikas, Sandeep, what should it be? Okay, Vikas is saying it should be MSME and home loans. Okay. Anyone else? Niladri is with option B. So yes, this time the correct option, my friends, it is option B. That is the MSME and home loans. So yes, with the recalibration in the growth of personal loans due to increased risk weights, the share of personal loans in the co-lending book is expected to decline in FY25, and it will further make room for an increased share of MSME and home loans. So what is getting declined? What is being expected to decline? The thing that is being expected to decline is the personal loans, and what is being expected to increase share of MSME and home loans. Clear? Now, if we talk about next question, it is asking what was the total loan from, what was the total loan sanction amount by REC in the fiscal year 2023-24? Is it rupees 1.36 lakh crore, rupees 2.68 lakh crore, rupees 3.59 lakh crore, or option D, that is rupees 5.09 lakh crore? What should be the correct option? We have to tell the total loan being sanctioned and in the fiscal year 2023-24 by REC. Now, what is REC? REC basically stands for Bank Reconciliation. It is like an acronym which is being used for the complete word, that is Bank Reconciliation. Is it so? No, it's not so. What do we mean by REC? This is a straight question. Firstly, tell me what is REC, okay? And then we would come up with the next thing. That is the correct answer of this question. The exact total loan being sanctioned, okay? The amount of loan being sanctioned. So, what is REC? Very first question. And next question is talking about what is the amount? Is it 1.36, 2.68, 3.59, or option D, that is 5.0? Okay, anyone? What is REC? First of all, what is REC? Amom, Vikas, Nilatri, Sandeep, anyone? No one is having any idea. Maybe in any of the previous classes, it will also be talked about what is REC particularly. What is it? Have 5 seconds, think about it. This time I would be definitely waiting for your answers. What should it be? Sandeep? Okay. So yes, yes, very good. Sandeep is absolutely correct. REC here it's talking about the rural electrification. Okay. So yes, we have to tell the total loan sanctioned, and the correct option for this one is option C. That is rupees 3.59 lakh crore. So yes, REC sanctioned a record amount of rupees 3.59 lakh crore in loans during the fiscal year 2023-24, and it indicates a substantial increase in its financial support for the power sector, especially for the renewable energy projects. So yes, Vikas is also correct. REC stands for Rural Electrification Corporation. Okay. So yes. Now, next question is talking about how much did REC's loan disbursement increase in FY24 compared to FY23? 33.66%, 17.13%, 66.72%, or option D, that is 21,371 crore rupees. We have to tell this is kind of like part B of the previous question. It is asking how much did REC's loan disbursements increase in the FY24 if we compare them to the financial year 23. What is the correct answer this time? Is it option A, B, C, or D? Have 10 seconds. Go through the question, go through the answers, and then do reply. Okay, no issues. So this time the correct option, my friends, it is option C. That is 66.72%. So REC's loan disbursement in FY24, it saw a significant rise of 66.72% to rupees 1.61 lakh crore. It is basically up from rupees 96,846 crore in the previous fiscal year, and it showcases, what does it show? It showcases a robust increase in the funding activities. So yes, this time because is absolutely correct. The correct option would be 66.72%. Next question is asking, what is the total value of the stake-based capital plans to sell in Axis Bank? Is it option A, that is $300 million, option B, $429 million, option C, $500 million, or option D, that is $448 million. So what is Bain Capital? It is a private investment firm. What is it? It is a private investment firm. Okay. That specializes in a range of areas, including private equity, venture capital, real estate, impact investing, etc. And it was founded in the year of 1984 by the partners from Bain and Company, and it is kind of a global management consulting firm. So yes, this is all about what do we mean by Bain Capital. What is it basically? We have to tell, as you know, it is a private investment firm. So we have to tell the total value of the stake Bain Capital plans to sell in Axis Bank. So Vikas is saying it should be 429. Sandeep is saying it should be 448. This time the correct option, my friends, would be option B. That is $429 million. So Bain Capital intends to sell its entire stake in Axis Bank for $429 million. It marks a significant divestiture from the bank since its initial investment in the November 2017. Clear? Coming up with the next question, which is asking, what is the total exposure of British international investment to India? Is it of $500 million, $1 billion, $2 billion, or $3 billion? What are we supposed to answer? We have to tell the total exposure of BII to India. That is total exposure of British international investment to India. What is going to be the correct option this time? Would be waiting for like 5 seconds. Go through the question. Is it like very direct, straight question it is? Amom is saying it should be 3.59 lakh crore. Okay. So yes, the correct option, my friends, would be Amom. You answered maybe for the previous question, dear. So yes, this time the correct option, my friends, would be option C. That is $2 billion. Right? So yes, British international investment, it has a total exposure of around $2 billion to India, and it reflects its strong commitment to support the country's financial services sector, affordable housing, finance, and MSME space, all three at the same time. Next question is talking about, in which of the following sectors is BII looking to make innovative debt structures to support growth? Technology startups, large corporations, MSME sector, or education sector? What is the correct sector's name this time? We have to tell the name of that following sector is which BII is currently looking to make innovation like the innovative debt structures to support the growth. What should it be? Is it working around the technology startups, large corporations, MSME sector, or the education sector? Okay, so Vikas is with option C, that is MSME sector. Okay, so yes, this time the correct option, my friends, would be option C, that is MSME sector. So yes, BII is exploring innovative debt structures specifically in the MSME sector to support companies in expanding their loan books further, and this approach demonstrates BII's focus on facilitating growth and the sustainability within this crucial segment of the Indian economy. Right? So yes, friends, now that's all for today's session. We will definitely be meeting tomorrow with further questions for 30-minute session. And if you are getting the things properly, if you are getting what we are trying to teach you, then of course you can do like, share, and subscribe our channel. And you can check out the description box. The link is being provided there. The link, what kind of link? That link is going to provide you with the further crash course information, the crash course which is Knowledgist is currently providing every single student, okay, for the upcoming exam of Union Bank, local bank officer. So yes, till then, bye-bye for now, and we would definitely be meeting tomorrow. Signing off, Pragya this side.